Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, August the 17th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could very well be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic stuff going on today. We have Bullard speaking later on this afternoon, and at 1 o'clock Central, we have the FOMC minutes. Bullard speaking an hour before those minutes are released. But it's going to be really interesting to see whether or not the Fed is going to increase or how their wording is, whether or not they're leaning towards increasing rates or leaving them unchanged for the remainder of the year. Right now, Fed fund futures are pricing in a 50-50 shot of a Fed increase at the December meeting. I'm fading a meeting increase in rates anytime this year. So the reason why is because we're getting really close to the holiday season, and I don't think that the Fed is going to actually increase rates to crimp spending going into an important holiday buying season like this. So this is going to be really important. I think they're just going to keep the interest rates low. We're not really seeing a major increase in economic activity here and or across the pond. So I think that they're going to keep it steady as she goes for right now. Another thing that we had on was the crude oil inventories. So the crude oil inventories came in as a drawdown of 2.5 million barrels, was expected a build of just slightly at 0.3 million barrels or 300,000 barrels. So that really would make one think that crude oil would start to spike. But we had gas, as we also had gas inventories decreased by 2.7 million barrels, and distillates was the real wild factor in there, where it increased by almost 3 million barrels. Now, the distillates are actually what goes into the manufacturing process of making plastics and other types of products. So those started to increase. And that was a little bit of a takeaway from the increase in industrial production and capacity utilization that we saw yesterday. So both of those are pretty much lagging indicators, but it's a bit strange that we're seeing industrial production increase and the distillates also increase, because that goes into a lot of those manufacturing processes. So I think that's kind of really caused a stall out with crude oil. It started rallying off the lows after that economic data point, as did the overall equities, but you can see we're just stuck there pretty much at unchanged at just down 9 cents on the day and hovering right here at this point of control. I added a little bit, which I will talk about here in a minute, to some of my crude oil shorts, and I'll get into that in a minute when I start talking about my trades. Right here we have gold, which is /GC, down $7 on the day, but really starting to get comfortable right here at that $13,050 troy ounce area. All right, looks like I got another fill. So anyway, on to the bonds, /ZB, up, 10 ticks, 12 ticks on the day. Hasn't really pulled back at all since we saw a bit of a rally here in the equities as of late. Here's the NASDAQ /NQ. As you can see, well off the lows of the day, but still down 7 points for the most part. E-mini S&Ps /ES down 4 points on the day, but in the last hour or so, they've taken back half of those losses, as you can see on the 15-minute breakdown on the E-mini S&Ps, finding a bit of resistance at this value area right here. This is the overall value area for the last several days. Value area low showing a bit of resistance on this. Showed support for the most part overnight, came up as soon as the market opened. For the day session, we blasted down. Didn't look like they were going to catch a bid. Then we got the data points for the crude oil inventories, and started to rally nicely off of those lows, but finding resistance at the value area low, and we'll have to see if that really continues to the downside. There was quite a bit of buying as we started rallying. The bulls started coming in, but it looks like they are starting to wane a little bit. All right, so this is what I talked about with the crude oil trade. Went into XLE, which is the ETF for the energy sector. And the reason why I went in here is doesn't look like there's a lot of high implied volatility in there, but there's still a lot of premiums pumped up in those calls. So I was able to get quite a ways away on these calls, and went into the September 77 calls and was able to collect 42 cents. So the 77 calls are way up here. I don't see, with the amount of crude oil that is still in inventories. We did have a drawdown, but we're still at near record highs for inventories in crude oil. So that gave me the opportunity to sell some calls way up there, and I just don't see that coming into effect. So that was a nice little trade there, despite the fact that it doesn't seem like there's a whole lot of implied volatility in here. Target was a trade that I tweeted out yesterday late. It was for the earnings, and I put on a strangle in here. Went into the August with just a couple of days to expire. Sold the 72 puts with the 78.5 calls to create that strangle. Collected 83 cents for it. So this was one of those trades that I was working, and may have gotten filled on it, but I doubt it, because I think I need to get up closer to 71.5 probably to get filled on that. So it might have been a different trade, like in Cisco, that I was working. But anyway, with this trade in Target, I'm just working to get out of it for 83 cents right now, and hoping to get a little bit of theta decay. They beat earnings, so I'm pretty confident that we can at least get a little bit more of a rally out of it before I get out, maybe for a slight loss or a scratch. So they do have a tendency to beat earnings. As you can see here, they beat earnings the last time and really had a sell-off. It's a bit of a strange thing. Here they missed on earnings and rallied. So they're a bit bizarre, and I actually almost held off on doing those puts. I thought that they would actually beat on earnings, and I talked myself into it, selling those calls. If I thought they were going to beat on earnings, I have to sell the puts to increase my break evens on that, which was they came to fruition. They beat earnings and still sold off. So I'm going to hold on to that and hopefully get a bit of a push higher. Now with the VIX, I don't usually trade the VIX. I don't like this instrument very much, but with the FOMC coming out today, there could be a bit of a spike in this. And I went into the September that expire on the 21st, and I bought the 15 calls and sold the 20 calls to help finance some of that. Now, why did I pick the 15 calls when it's way out of the money? This is giving the front month, which is the August futures. I was in the September futures, the September options. So when looking at the September futures, they're right around 15. So I'm picking the ones that are just slightly out of the money for that particular contract. It looks a little bit strange that I'm buying the 15s when it's trading at 13, but further out in time, there is contango. So that means that forward looking, there is a chance of higher volatility, and that's why I picked those 15 calls. For anybody that had any questions about that, why I would pick something so far out of the money, it's actually right at the money with those 15 calls with the September futures. Now Cisco is a trade that I'm looking to put on, may have just gotten filled in there, and I'm looking at the September contract, and they came out with earnings. They still have high implied volatility here. IV percent is like almost 60. So usually right after those earnings, we get some volatility crushes. You see in Cisco, the last earnings cycle, and the one before that, you get this volatility slam down a little bit. We're not seeing that right now, a couple of days after the earnings. So that's allowed me to get into this afterwards. I think we're going to continue to see it trade sideways here as it did going into earnings. We had the big spike out, but right back to normal, and stuck in a trading range from about 52.30 to 51. So with this, I went in and did the September and bought the 45 puts, sold the 55 or the 50 calls and the 50 puts. That's the part of the straddle, and then bought the 55 calls to define the risk. So the 45 puts, the 55 calls define my risk on the straddle, which creates the iron butterfly. Now, having said that, I collected $2.50 for it. That gives my break even to the upside at 52.50 and to the downside of 47.50. So I've got quite a bit of buffer there, and I've capped my losses at 55, which would be up here, and the 45s, which is way, actually 45s are way down here. So, and my break evens are just below this support level here, and to the upside, just above or just below where this high was previously. So that should hopefully stay in that range. I'll get some theta decay and some volatility continuing to come out of this particular underlying, and we'll be able to cover that for 50% of our max profit on there. All right. So Friday's webinar is going to be on long put butterflies. So that should be a really good one. It would actually worked relatively well with Cisco, and if I didn't get filled in Cisco on that, I bent my rules because of the markets in here are a little bit wider than what I would normally go into, but it's just so difficult to find something with high volatility going around right now that I bent one of my rules there. It does get a lot of volume and open interest in there, so I was hoping it was kind of gonna be one of those things where somebody is just in the weeds, as we used to call it, on the floor. So we'll have to see. So check out protraderstrategies.com, sign up for that webinar. That's all I got for you today. If you can't take that, take it easy.